Thanks again for joining the Lessons into Blessings podcast, where we are leveling up investors in their financial freedom by sharing stories and strategies of average people who change their financial trajectory through real estate. So we have with us William Stevens, somebody that I've grown to know from an investor standpoint. Used to master lease a few of his properties, and I just wanted to have him on this show because I seen how he just accelerated his real estate over the pandemic time period. And I wanted him to share his story a little bit and some of the strategies that he used. And so thanks for joining us today, William. How's it going?
Thank you very much. I appreciate it. I'm happy to be here.
Yeah, no, thanks for coming on. So really quickly, I wanted people to get just a background on kind of who you are, if you have a family, kind of what you do, just to give a little bit of background on kind of, where you coming from.
A little backstory of me is, when I came to the United States, I decided to, just live here, because the journey was to work here and go back to Jamaica. But I decided to, move here and live. Anyway, how my real estate journey started, I started house hacking when I was living in South Carolina.
Okay. And explain to people what house hacking is.
House hacking is when you have a property. Because what I do, I lease a property, actually, a 2-bedroom. I live in one, and I actually rent the next one out to a friend.
Gotcha.
You know what I mean? So, and I rent it out for a little bit more, so I could almost cover my lease payment.
Yep. Great strategy, by the way.
That's where I started a little bit of house hacking.
Yeah. Cool. So I know you have, kids, wife. Tell us about just, going from kind of the house hacking strategy, moving to Arizona. Where did kind of you start from a real estate standpoint, transitioning kind of to the Arizona market?
Well, after I moved to Phoenix, Arizona, we decided that we're gonna, maybe try to figure out how to get credit. So the first thing we do, we lease an apartment for 1 year, and because I educate myself a little bit from the start, from the get-go.
Yeah.
So I kind of learned that the best thing to gain credit is to start there. So I lease, a apartment building, and we lived there for a year. And after that, we try to, see if we have credit now to buy a property, which we do. We have a little bit of credit. I was pre-qualified for about $60,000. And, everybody said, hey, most of my friends said, you're not going to be able to buy anything with that. But I said, you know what? I feel there's something out there. So let's go and look.
Yeah.
I found a realtor online. We decide, me and my wife, we decide to find something, close to that, $60,000 mark. Anyway, for a realtor to tell us that, of course you guys can find, something. But then I was looking for a fixer up, because I was thinking about a fixer up,
right,
is the way to go. Because that's where I started to kind of read this book named Fixing Homes for Dummies. When I started to read that book, then I started to think about, doing fixer up.
Gotcha.
So we found a place, actually found a place. It was pretty bad. It was really, really bad. And we decided to look at it, and we look at it, and my realtor tell me, hey, I'm sure you're not going to like this place, but I just want you to see it because it's actually in your price category.
Right.
So when we look at it, we said, you know what, this been treated real bad. It's a foreclosure home.
Yeah.
And, a lot of squatters been living in it. So they mess it up real bad. So we decided that, you know what, this is something that we can actually fix ourselves. And maybe this can have us scale to another property.
Right.
So we decide to look at it, and we came there like in the night hours to talk to the neighbors and see what the neighborhood is like,
Yeah.
So we actually closed on that property for $40,000.
Wow.
And
How was it? Like a 3-bed, 2-bath? I know you might have had a
yes, it's a
1 or 2.
3-bed, 2-bath. You got that right.
Okay.
And it
What
was really,
year
really
was
bad.
that? What time frame was that?
Oh, that was in 2010.
Oh, okay, so good
That was
time
in
frame, kind of when the market
2010.
dropped and you're just kinda
Yep.
you caught it on the down slope. Okay, got
Right.
you. Yeah.
Yeah. So in the 2010, and we actually, anything we didn't know, we kind of look on YouTube, and we kind of live in there, work on it ourselves, fix it up real
Yeah.
nicely, keep it for a year and a half, and we sold it for 170,000.
Beautiful. That's awesome.
And that's
So
when
now
we,
do you do what the traditional, investors would do is take that cash, roll it into something else? How did you kinda transition out of that property?
yeah, we actually roll it into something else. We look at a 5-bedroom. I guess you already know that property that we have, the 37 Lane property.
Right, yeah.
So we roll it into that property because we were planning on, when we see that property, we get it on a low price too, because the kitchen and the downstairs bedroom need to be complete. And because we're so versatile in doing fixer up,
Right, right.
we figure we can kind of fix up the kitchen, fix up that downstairs room, and get it really nice and ready, which we
Got you.
did.
So was that a foreclosure as well or, just a fixer-upper?
That was a short sale home.
Okay, okay.
That was a short sale home, and
Mhm.
the the owner, I able to meet with him and talk with him too. They just, two people living there, and it was too big for them. They're trying to have family, and it didn't
Right,
work out,
right.
so they decided to rush out of it real quick.
Got you. What I love about, what you're talking about is, and this is what I try to tell people is look and assess what you have, right? You never really let the fact that, hey, we don't necessarily have good credit, we didn't qualify for a lot, but you didn't really let that shut you down. You assess what you had. Like we have skills to fix up properties, and so you were able to utilize those skills and put it to work for you, right? And just starting off slow. So I think that's a good, people should just look at what they have, right? And figure out, okay, where do they fill the gap, right?
Yeah, it's as I said, it's a lot of education come behind it too. It's not pretty
Mhm.
easy, and because dealing with the banks and dealing with your realtor and all of that, you have to create a mindset of the journey that you wanted to head to, and that's what helped me to educate myself daily
Yeah.
and talk to some like-minded individual,
Hmm.
and that's what helped me to grow from where I was.
Yeah, no, that's good. What helped you create that mindset? Was it just the education and talking to investors? How did you shift your mind into kind of that possibility space of, yeah, we can do this, and really getting over kind of what the friends, said you could do?
To be honest to you, when I was growing up, I always hear my mom said, um, "I wish I have some money to make my kids happy." And I think about that all the time. And I said to
Yeah.
myself, even though my mom passed away, since 2017,
Hmm.
2017, yeah, I always said I'm gonna let her proud. I really want her to be proud to see, what she wanted in life. I'm gonna try hard to fulfill it,
Yep, absolutely.
and that's what
Changing
the
your
journey I have.
generational wealth trajectory right there,
Right.
making it better for your kids. No,
Yep.
that's good. That's good. So fast forward to, okay, from that house to 2020. So you took, the $60,000 property, you were able to sell that, roll that into kind of a private residence for you and your family. Now fast forward to 2020 where you just like you accelerated it, right?
Yes, I
What
accelerated it.
was the process that you took? Because it's not just you, right? It's you, your wife, and your 3 kids. And I know a lot of family units, they're like, well, you can do it, Tari, because you're single. but you're a
Yeah.
family, right? You have, a wife, and how many kids?
We got 3 at home right now.
3 at home, right?
Yeah,
So every decision you make in real estate affects them, right? So
exactly.
what was that like, just getting, Samantha, I know that's your wife, getting her on board, and just so that you guys could really accelerate moving into where you saw the vision of where you could take it?
Part of it have to do with a lot of education too.
Yeah.
And it's just the growth and the reason why I'm here in this country too, because I'm looking at life and I'm saying to my wife and my kids, we on a journey, building generational wealth. And this is what it's gonna look like. It's gonna be tough, but we gonna, you know, pencil it the way we know how to do it.
Yeah.
So in 2020, I decided that I want to scale a business. So how can you do that? Because I reach out to a lot of investors, like-minded investors, and their story was, hey, the market gonna crash, the market gonna crash. So I notice when I reach out to a lot of investors, they always kind of negative towards what they see in the news
Yeah.
or what they heard from other people. Um, I get some of my education from Bigger Pocket podcasts
That's a
and
good one for sure.
Bigger Pocket seminars and webinars and stuff like that.
Yep.
So I just learned that the best thing to do, don't worry about it, just pull the trigger.
Yeah.
You know what I mean? So when I went to Scottsdale and I found a broker, and they're willing to sit and talk with me, and I tell them exactly what my picture look like moving forward with my real estate journey. And they said, you know what, at your age you should think about maybe buying a home. And I said, you know what, you're right, I should think about buying a home. So
And that really, he directed you towards that strategy. Is it just because your age, or just the situation kind of that for you having a family, and kind of the criteria of how you wanted to accelerate that financial picture? He felt like buying and holding, picking up investment properties to buy and hold would be the best strategy for that.
and more so, how I'm moving slow towards not having a lot of cash,
Got you.
and buying a home and using others people's money, you know, is a way to go. Buy and hold. If you're gonna use other people's money, you're better off that way, because fix and flip, it's gonna be a longer
Cash intensive.
term.
Yeah.
Yeah,
Hmm.
when you have to try to find cash to put in, to a property, and have to wait. You have to have cash to keep it going for
For
6 months
sure.
till it
To
re-up
hold it.
and all of that.
Yeah,
So
absolutely.
it said buy and hold is my best bet.
So take me there. Okay, you guys identified kind of what your strategy is, and I definitely think that every investor, I always tell them, you want to find your area of focus.
Yeah.
How did you kind of determine did you determine the area that you wanted to be, location you wanted to be in, based upon how much capital you had to put into a deal?
Yeah. Well, as I said, I found a broker which is pretty knowledgeable about, he's an older guy, and he's kind of nerdy guy too, but he knows his stuff. You know what I mean?
Yeah.
So he looks at a lot of different places. He looks at um, what coming in, a lot of driverless car coming in, a lot of stuff gonna happen in the next couple of years.
Yeah.
And he said, you know what, this is how I think you should do it. You should look in Phoenix area for uh, a rental property, and this is how you're gonna do it. He said, you know what, you got this one property, you got some equity in this property. Um, Take some equity out of this property by refining it. I'll refi it for you, and I'll take some equity, put it in your emergency fund, and then your 401k, you take some money out of your 401k for your down payment, then you buy your first rental property,
Okay.
and then the money that you keep in your emergency fund will help you to get your second property moving forward. And then if you save up a lot more money, maybe 5% more, you can able to close on another property before the end of the year.
Gotcha.
So, but what helped me with some of my money is my present property. I decide I'm gonna Airbnb the downstairs of it.
Yep.
Yeah, and I
Yep.
Airbnb it, and I really
So pretty
still
much house
making some
hacking
money.
again to raise
Yeah,
the
house
income,
hacking
right?
almost like again.
Yeah, absolutely.
So I make some money from it, so I could put that towards, my next deal.
No, that's great. That's actually how I got started as well. I bought my first property, rented out the rooms, and that's kind of what led me to building up the capital to be able to buy more properties. So that's good.
Right.
So now you've got the first one under wraps. What was your strategy? And this is kind of where I kind of met you, is your transition of like, man, it was like that year. It was like you bought 4 properties in a year. And I was like, man, this guy is not playing.
That was amazing. That was amazing year.
Yeah.
It's just weird that I went to this property and I see a line for showing for this property. And I said, I gotta see this property. And I went to see this property. I tell my realtor that, hey, I want to go on a contract with this property. I went on a contract. I didn't get it. I was out bed, and I still been going to that property, looking at it still. And I said, there's something about this property that I think this property going to be mine.
Right.
And the year said this property came back online. So I put in a higher bid for the property next.
Yep.
And then I actually get it.
That's awesome. Yeah, I think people don't. I've been in that situation too, where you put in an offer, you're disappointed, like, I just thought that was going to be mine, and it comes back to you, and you're able to take it down. So that's great stuff.
Yeah.
So you ended up taking that and you rolled it into. Tell us a little bit about how you pretty much you rented it and you utilized that rental income to then purchase the next one.
Yeah. So the money that I get from the home towards just, because it's a strategy you got to use for the bank. That the bank want to look at your debt to income ratio.
Yep.
And when they look at your DTI, they look at your assets and stuff like that. So, I have that money in my emergency fund, and plus I'm getting rental income. And what helped me too, before I moved out of my property, I got it rent before I even moved out.
Right, exactly.
Thanks to you. So I know I can show income from both properties. So it let me eligible to move into the
next
property.
one. Yeah.
The next one.
So that's a great strategy of I tell people, so if you live in a property for 2 years as your primary residence, and then you rent that out and you move, if you sell it in 5, you avoid the capital gains taxes. So, but what you did was being able to rent that primary residence to show that, hey, we have the rental income and we have the income, so that it puts your income up, so your debt to income ratio is exactly where it needs to be by properties, and to buy more investment properties. And you just kind of snowball that, right? So now you have 2 properties, you're showing rental income for both, and it's getting you into your next property, which you're buying as a primary resident, right?
Yep. And it's pretty good. Yep.
That's awesome. And now I think you're in your 4th, right?
Yeah, this property this last one that I have right now for 22 is I use hard money lender to take this one down. I walk into this property and I actually decide that I'm listening to the way the seller's agent is talking, and she's telling me that, okay, the owners, they're planning on selling this property for $1 million. And right away, I started to look at the comps in the neighborhood, and I said, $1 million? Well, I'm saying in my mind, if I turn this into a 5-bedroom, 3-bath, I can sell this for over $1 million. I see a 5-bedroom with the same square footage just sold for $840,
Mm-hmm.
and it doesn't even nice as this one.
Right.
So then I said, they're selling it for $515. I think I need to go on a contract with this property, because the reason why I said that is because the downstairs room, it kind of remind me of my 37 Lane property.
Gotcha.
Downstairs office downstairs actually can turn into a bedroom.
Gotcha.
With a French door, and the half bath downstairs can actually turn into a full bath, and it can actually have a walk-in closet too.
Right.
Which I'm actually doing right now.
Uh-huh.
But
so you're rehabbing again, and you're adding bedrooms to just, pretty much increase the value, right? You're adding value.
Mm-hmm. Yep.
Good stuff.
So this, let me tell you the story about this property a little bit. So I one of my investor friend, he's a multimillionaire from New York. He recommended me to a hard money lender from New York, because I talked to my hard money lender here in Phoenix, and they were having difficulty getting me to the numbers that I wanted.
Yeah.
So the second hard money lender from New York, they decide they're gonna, they look at the property, they look at everything, and they look at what I wanted to do. They said, okay, we're gonna give you $50,000 in rehab costs to do what you want, to fix up this property. And it's going to be at 9%, 9.3%, I think it was, for 12 months interest only. And what happened is, I was excited about it and everything seems to going pretty good. I went on a contract with the property and all. For some reason, they have some issues with appraisal.
Oh, okay.
The appraisal did a drive-by, and the underwriter said, hey, we need an interior appraisal. So they have to actually send the appraisal back.
Okay.
The appraisal was upset, so everything kind of become late. I end up having to sign over my earnest money, and my realtor said, hey, you got to give this one up. I said, that's not in my nature, man.
Right.
That's not in my blood to give up.
Right.
I need this property. I see the potential of this property, and I really need it. And they said, well, it's the owners, they're getting upset. Everybody's getting crazier. I don't know what these hard money lenders are doing. Anyway, it came back under the underwriter. They wanted me to come with 10% to the table. So I have that ready for them.
And that changed from 10% to what was it before?
Well, no, they wanted me for down payment, it's 10%.
Okay.
For down payment. But they changed it later on and said they wanted me to come with 19% to the table.
Okay, got you. Because the appraisal didn't come as high as you were expecting.
Yeah, the appraisal came 565. I'm purchasing the property for 515.
Right.
The appraisal came 565. We were hoping the appraisal came like 600, maybe 610.
Yeah.
But it didn't came to that level. So the underwriter looked at it again, and they said, okay, the best we can do for you, William, is you have to bring 19% to the table. We're going to do 9.9%, and we're not going to give you any rehab money.
Whoa.
So that changed.
That changes the game for sure.
Change the game. And I really need this property. So I look at my numbers again, and I said, either way, it's still, it still can work. This deal still can work. So I talked to them, and I tried to see if I could get them back to the 10%, but they wouldn't budge. So I have to raise money.
So you raised the funds.
I raised the fund.
Good
This is
stuff.
my first time raising money. I don't know how I do it,
Got you.
but I'm telling you, and if rookie investors out there, if they serious about scale and have a mindset of real estate,
That's
it's
good.
possible. It's
Yeah,
very
that's good.
possible. Because I'm telling you, I was like in Chandler, Arizona, and I met a like-minded individual in the parking lot. I never met this person before. This is the first
Wow.
time I'm seeing this person, and I'm telling them my story.
Yeah.
And he said, "Oh, I'm an investor too, man. Um I invest in Scottsdale area. We have a lot of meetups over there. You should check it out." And I said, "Well, I'm closing on a property right now, man, but I'm in the middle of trying to raise money. You know, I'm trying to raise about $50,000 right now, man. But I don't know where to turn." And he looked at my situation and he said, "Hey, I don't know you from Adams, man, but I want to make you up. See $4,000 a year, man. Just give me your Zelle account and I'll just send you $4,000. Just pretend like I never gave it to you, man.
Wow.
This will give you the boost to keep going and raising more money."
Wow.
And it did. I actually raised $120,000.
Wow. That's amazing.
Yeah, I raised $120,000, man. I never seen this before.
That is amazing. So where did you just said, "Hey, by any means necessary,"
I'm
essentially.
gonna I'm gonna get it, man. I call. It's funny. I call. People got to realize that sometimes you call everybody in your phone list and nobody budge. Nobody budge. I call my relative. I call my friends, my closest friends who I know have
Yeah.
money,
Yeah.
and they all ignore me. Strangers, brand new people. My handyman always asking me for money. Always asking me for money because he always broke. And he was asking me for money while I'm trying to raise money. And I'm saying to him, "Buddy, I'm trying to raise money. You're asking me for money."
Yeah.
And you know what? He said, you're trying to raise money? I said, "Yeah, I'm trying to raise money." He said, "I can help you, man." I said, "How can you help me?" He said, "My daughter have some money."
Wow.
Isn't that amazing?
Yeah, exactly. That is crazy. But that's beautiful. I mean, mindset is such a critical part of real estate. There's
Yeah,
always going to be hiccups, there's always going to be bumps, there's always going to be roadblocks, and it's really how creative are you to kind of get around those situations. So that's an awesome story. So you obviously took it down, I'm assuming.
I took it down. I closed on this property. As soon as I walk in this property, my next door neighbors were saying, "Hey, what plans you have for this property?" And I tell him, just trying to be nice and tell him, and 2 weeks later, he came back to me and he said, "Hey, um, if what you say you're going to do with this property and the money you're trying to make from this property, my son trying to move closer to me, and
Wow.
because I want the grandkids them to be closer to me,
Yeah.
he'll pay you more for this property if you don't mind." And I said, "Are you sure?" And he said, "Yeah." I said, "Well, everything is for sale what for the right price."
I love it.
So yeah, so he said, "I'll have him come visit you, man." And he called me. We scheduled a date. He and his wife came over. I was telling my wife about it. My wife said, "We're not going to sell this home. I liked it. I'm not going to sell it." I said, "I keep telling you, don't fall in love with property."
Exactly.
You
Number
know,
one rule of real estate, don't fall in
yeah,
love with the property.
yeah. So the guy came here and we talked, and he loved it. He really liked it, and he said, "How much?" Um, I asked him, "How much would you offer me for this property?" And he said, "The most I'll give you, man, is 640K. And I scratched my head and I said, "No." I said, "Give me 720. Give me 720." And he said, "That's not a bad number. Let me and my wife go home and sleep on it.
Right.
And we touch base with you within a week and a half." And sure enough, 5 days pass, a property next door me come up for sale. Property next door my property come up for sale. I said, man, I hope he doesn't see it. But he actually see it. So he actually bought that one for 600.
Okay, got you.
He bought that one for 600. So even though you're in real estate, sometimes you don't necessarily need to get greedy,
right?
And try to throw your numbers way up there.
Yeah.
But, it's still a good deal.
Yeah. No, understood. So have you decided to move into that property?
Yeah, I actually moved in here because I'm in the middle of refining it.
Okay.
So I'm refining it as a residential property.
Okay.
I actually rent my present property out.
Okay.
I'm making over 6-figure on my property because I'm renting out room by room. I even rent the garages out.
Yeah.
My neighbors have.
Gotcha. That's awesome.
So I'm renting it. I'm scaling with that property pretty well.
That's good.
As soon as I walked out of it, it's like thousands of people were killing me for that property.
Right. No, understood.
You know what I mean? So I rent it out.
Home, which is just designed really well for that type of a model. Mm-hmm. Exactly.
Yeah.
So you got so many different strategies and different things that you're using to continue to, number one, fund. And doing the numbers is critical, right? So I don't want to skim over that. You had to keep going back to the table from an analysis standpoint and say, does this still work, right? Like if this switches or if this changes, does this still work? Numbers are critically important. And I'll just, yeah, man, critically important. You've got to make sure that the numbers work because you don't want to buy wrong. I always tell people, if you buy right, you can weather any storm, right? And so making sure that the rents work, making sure that all the numbers work to make sure it can weather you through any storm. So I'm glad you highlighted that a little bit. It sounds go ahead.
Yeah, and I don't want to scare new investors because I know a lot of new investors out there. If you analyze a property as a new investor and your numbers show 7% ROI, I think you should take it down. That's your first property. I think you should take it down.
Right.
You know what I mean? Don't try to aim for 12%. You know what I mean? If you're in the negative, don't touch it.
Right. But, exactly. If you're in the negative, don't touch it.
Don't touch
it.
And
it depends on. Go ahead. Sorry.
Yeah. If you're new investors and your numbers in a negative, don't touch it. But even if it's 3%, I think you should, if you're your first property, I think you should take it down.
Yeah. And I think some of that return, based on cash flow versus appreciation, right? Usually people are trying to choose, okay, do I really want a cash flow on this property and just have that monthly cash flow? And maybe it's not a high appreciating type of a property. Or is this where I don't get that much cash flow? I'm able to cover the mortgage, but I know from an appreciation standpoint, it's in a really good area. It's a type Class A or Class B property. So I know the appreciation will get there and I'll bank off that. So everybody has to do their criteria of what makes sense. But yeah, as starting off, depending on what people want to attain, the key is don't be in the negative. Make sure you do your diligence on all the expenses and it covers.
Yes.
What I love about just your story, and that's the reason for the show, is lessons into blessings. I think some people sit on the sidelines because they're so afraid to make a mistake. And the reality is just there's going to be things that happen. And I think your trajectory and kind of just showing how you've navigated the road signs, right? To still continue to do more real estate. And I think now you're in a space where you're able to invest as a limited partner into other people's deals. And now you have the capital. So you went from a space of no credit, not that much capital, within maybe a 5-year or so span to, hey, now you're investing in deals and you're able to make passive income where you're not having to sweat and do the hard work. And you're making your money work for you. Yeah, exactly. And leverage is a beautiful thing, especially when it's at a percentage rate. Obviously, we're seeing mortgage rates go up and things like that. But But when you can do it at the right percentage rate, I mean, it's great. I
It's
can't.
amazing.
Mm-hmm.
Seeing where I'm coming from and my network is over 2 million is just awesome.
Yeah,
It's
that's
awesome.
really awesome. That's really awesome. Any last words? I always tell people, I ask kind of the last question is just, what was your hardest hurdle? But you threw so many of them out there. What is, that lesson that really transferred you into that blessing place where you just, man, you were just able to run. But I think you gave so many examples of that.
Yeah, this example was raising capital for
Yeah, I
my
think that was
my deal,
awesome. Yeah.
and
Yeah.
knowing that people who I think would fulfill this pretty easy for me, it wasn't the way I think. You know what I
Hmm.
mean? And people who I never thought would have money, they do have money,
Yeah.
and this was amazing. I was, people were giving me money and people were helping me so quickly with, you know, they don't need anything, they
Right.
just want me to teach them about real estate.
Right. Exactly.
Some people say, I just want you to help me to learn about real estate, and this is what I'll do for you.
Yeah, that's awesome.
So that was something that new to me, and that's something kind of opened my eyes.
Yeah, that's
You know,
beautiful. That's beautiful. Yeah, I love that. Definitely know what's in your wheelhouse. You had education. You brought certain things to the table that was able to exchange for, the cash that you were able to bring to the deal. So, thank you, William, for joining us. Thank you, you all out there, for joining us for this episode of Lessons into Blessings. Until next time.